Crypto. All the crypto news in one place.
Breaking news. Visa launches stablecoin advisory practice to keep up with crypto wave. The stablecoin bill passed a couple months ago. This is not a surprise to us. We know that things like this will happen, are happening. This will happen with the Mag 7, the Mag 10. All big entities are now integrating stablecoins.
XRP spot ETFs saw 30 straight trading days of net inflows since launching on November 13th, which is absolutely insane. I don't think anybody's broke this record, especially in crypto. They actually even outperformed Bitcoin and Ethereum spot ETFs because no daily net outflows recorded since launch.
Another reason is that stablecoins are ideal for transactions, especially cross-border payments. In fact, stablecoin transaction volumes surpassed those of Visa in early 2024, and although much of this was from crypto trading, it still proved that stablecoins are far superior to outdated systems like SWIFT that we have today. This is precisely why banks are already worried and why fintech giants are scrambling to enter the stablecoin race.
Now, Visa launches stablecoins advisory practice to help banks and businesses build strategies. The move comes as Visa deepens its stablecoin network and reports a 3.5 billion annualized run rate stablecoin settlement volume. But this is only to guide banks, fintechs, and merchants and enterprises on strategy. I don't know if it's going to be for the small underdogs. I would hope it would be, but again, it's the banks. They care about people with money.
All right, guys. So today is the BitTensor halving, right? So it happened literally, if I show you here, half an hour ago or so. This little sign here, right? 10.5 million TAL tokens have now been mined. It's got a 21 million supply, just like Bitcoin has. So obviously at 10.5 million, there is, well, that's half the supply. So the emissions reduced by 50%. And you can see really clearly on this BitTensor halving kind of like emission schedule here. If I get my big head out the way a minute. You can see, right, we've got, this is the sort of like emission schedule. And right now, if I get rid of the alphas as well, BitTensor is now in its first halving, okay?
JP Morgan, the banking giant with 4 trillion assets under management, is rolling out its first tokenized money market fund on the Ethereum blockchain. JP Morgan will seed the fund with 100 million of its own capital and then open it up to outside investors on Tuesday. So the fund is called My On-Chain Net Yield Fund, MONY, Money. Looks like a normal money market fund. It holds assets designed to preserve capital and stay liquid. What's different about this fund is that it is on Ethereum. It's different how the fund operates. Shares are issued and tracked on Ethereum using JP Morgan's Kinex platform. This lets the funds settle faster, issue and redeem shares continuously, and move ownership without waiting on traditional clearing systems.
So if we look at the on-chain data, short-term holders are under pressure. So what this essentially means is the amount of short-term holders that are selling at a loss right now. And you can see that this is pretty red, meaning a lot of people are selling at a loss from the short-term holders. However, keep in mind that this is also, by the way, the biggest 7-day change since the FTX crash in 2022. So keep in mind, though, that usually when you see a lot of people selling at a loss, that coincides usually with a potential reversal towards the upside.
What's happening in Bitcoin right now is that institutions via ETFs are buying more than 100% of the supply. And they did it in 24, and they're going to do it in 25, and they're going to do it in 26, and in 27, and in 28, and in 29. The reason I think you can get to that $1 million price target is eventually you'll see the same thing that happened in gold, which is the price just goes parabolic. Once the sellers are completely exhausted, price skyrockets. I do think the next cycle in crypto is the cycle where Bitcoin catches up with gold. And then it's a question of how much bigger than it gets.
Bitcoin miner capitulation. This is from BitGet, and this was actually was floated around in X this morning as looks like Bitcoin miners in Xinjiang in China. I think I said that right. Looks like they're all shutting down. And this isn't like people are like, who cares, Rob? Because China keeps doing stuff like this all the time. Didn't they ban mining not too long ago? You're right, they did ban mining. But if you can take a look here at the Bitcoin mining map, where do you see the most amount of hash rate coming from? Oh, that's right, it's from China. China. and of course the United States.
Looking to the liquidations, right? Looking to the liquidations over here, 24 hours, we've got a bit of a spike up, decent relative to what the low volatility has been for the last couple of weeks and months. Sorry, guys, you guys are making me laugh in the live comment section over there. So relative to the last couple of months, yes, decent spike up over here. 653 million, of which mostly longs were liquidated over there. But the daily exchange volume, another canary in the coal mine, continues to diminish.
The Federal Reserve just announced it's unleashing the money printers to finance a $9 trillion wall of federal debt coming due this year. As in, markets won't buy it, so the Fed will with counterfeit money. This is where the Fed types zeros on Excel sheets in the basement, declares their dollars like any good counterfeiter.
If you're a crypto holder, this is a massive deal. Markets, they're not going to buy the $9 trillion. They can't absorb that debt.
Okay, so look, the banks are starting to call bullshit here. They are seeing the writing on the wall. Banks like Barclays, TD, JP Morgan, they all agree the Fed is gearing up to be a major buyer of US Treasuries again, focusing on short-term T-bills. Barclays just raised its forecast to $525 billion in Fed T-bill purchases for 2026. That's up from their previous estimate of $345 billion before, roughly $55 billion per month through Q1, tapering to $25 billion later in the year. JP Morgan and TD expect similar numbers, hundreds of billions to absorb surging Treasury issuance. Officially, this is being called reserve management. Functionally, it's massive liquidity support. Why does it matter? Well, there's that old saying, don't fight the Fed. Liquidity is coming. Being extremely bearish right now is fighting the Fed.
Do take in account that this Friday, the Bank of Japan is going to get a new interest rate hike, and historically this historically always causes at least a 10% correction. So hopefully it's going to be different this time, but I personally don't really think it's going to be the case here. So this is going to be happening this Friday. So prepare for big volatility to come this week here.
Do you believe, Mando, the carry trade is already priced in? Or not, and that's could result in a global market crash?
Look, the carry trade's been spoken about for a long time. If it's affecting Bitcoin by itself, I think that's kind of wild, because everything else is not really being affected by it so far. I don't think this is the thing that's driving markets.
We know, though, that in 2019, Bitcoin topped right before quantitative tightening ended, right? Like, I mean, we all remember that. And, you know, it just happens to be that Bitcoin is topping right before QT ends again. So it's fascinating how QT is ending in Q4 of the post-halving year, which is always when Bitcoin has historically topped out at the end of a 4-year cycle.
And especially the biggest support for ETH is going to be this zone right here, the $2,700 level. If we break below this level, I think it could be getting much worse. I think then $2,100 is likely the target for ETH here. But yeah, we just have to wait and see how it's going to be playing out. And ultimately, ETH is just going to be reflecting the Bitcoin price action.
Here we go. Commodity floor value model, estimated production cost per coin from the real plan C. He says the following. I'm going to break it down to you in detail. I think this is one of the most important charts that you can potentially look at if you are a Bitcoin investor or trader. What are the most important Bitcoin charts you've seen? Right? I didn't read that, actually. He said the same thing. Notice how many times Bitcoin has found support at this estimated cost of production red line. The line currently sits at $70,000. This is not just on-chain data. This is the cost of production model for Bitcoin, which is a commodity, and it's been classified as a commodity officially. And commodities almost never trade below their cost of production.
But first of all, Bitcoin has seen an exact breakdown from off the upward sloping support line from off this ascending triangle. And historically, Bitcoin tends to create, of course, many of these continuation patterns after seeing somewhat of a dump or somewhat of a bump. And usually the continuation happens
territory. Now you'll notice we've only been in this territory a handful of times. We did it back in the day of 2011. We did it back in the days of 2015. We did it back in the days of 2018. We dipped our toe below back in the COVID crash of 2020, which we just discussed. And then we did it back in the days of 2022. Now, I'm about to really set the record straight here because you can see we did it once, twice, 3, 4, and 5 times.
So, did you enjoy the zap? Let me know in the comments.